All right, today we're starting the tax unit. This is chapter 6, and let's go through a couple things before later this week we will be actually filing taxes on the tax forms. The only key terms for today that we're going to go over are taxable income. Please highlight with me on your digital doc. Taxable income is the earnings that are taxable. Well, that sounds straightforward. What does that mean? The difference being there is some money that is under the table. And even, for example, if you're a waitress, something like tips that you're given in cash. But any income that is taxable that you earn needs to be reported on your tax return. So taxable income can come on a W-2, or it could be tips or money paid to you under the table. But the point being that any cash you are paid as your income for the year should be reported to the taxes, to the IRS. And leading us into the next word, the Internal Revenue Service is the government agency that collects your federal taxes. Obviously, there's state taxes as well. That would be the Franchise Tax Board that collects your state taxes. Okay, let's go down to the next slide after we highlight this. Tomorrow you will do a Quizlet with more words, but for now, these are the only two we start with. All right, who pays taxes? Imagine how much money it takes to run the city, the state, and the federal governments. Where does money come? To pay for law enforcement, military, national security, health research, social programs, space programs, and other government programs, including teachers. Well, guess what? Taxpayers. So you'll see a box on yours, on your digital doc that you're going to be filling in. So the easy answer is taxpayers. You're typing in with me on the digital doc. And who are these taxpayers? This is anyone in the U.S. that is working and earning income. By the way, I have like a cursive print, and some of you might not know how to read cursive. So let me read it again in case you can't read my writing. Anyone in the U.S. that is working and earning income, or who pays tax. And there are many different types of taxes, which we're going to see on the next slide. Okay, what about you personally? And you're going to type in an answer here. In 2021, the minimum for a single filing status under age 65, that's you, and that's me. No, not me, I'm married, but also me under 65. If you earned a minimum of 12,550, if your income is below that threshold, you don't need to file a tax return unless money was withheld from your pay. So if you did earn at least 12,550, or if money was withheld from your pay, then you should file your taxes. And then there's an actual link to the IRS here that you can actually go see this information directly on the federal website. But so did you earn over 12,550 during 2021, or was money withheld from your pay? So you're going to give me one of two answers here. You're going to say possibly yes, I did earn more than 12,550. And then it asks, did you already file your taxes? Do you still need to file? Did your parents file for you? Did you complete it yourself? Etc. So you could say like, I have already filed my taxes. My parents did it for me. Or I did it myself or whatever. And then you could also say, I did not earn more than 1250, 12,550, but you did file your taxes because they took money out of your paycheck and you want that back. So if you look at your W-2 right now and it says you earned $9,252 for the year, you're like, oh, technically I don't have to do a tax return. Cool, I'm under the threshold. But if it says income tax withheld, and it shows $259, I'd be like, hey, that's my money. That's my $259 that the government took, and I don't even need to have taxes withheld because I'm under the threshold. So I would definitely file my taxes to get that money back. So you're going to want to look at your W-2 to see, do I have to file taxes or was some money withheld? And if you didn't work at all in 2021, then you can just state that. No, I did not work at all in 2021, did not need to file taxes. And if you want to tell me here, but I'm getting a job this year, Miss Sanchez, I'm getting a job in, this summer or right now, let me know. Next is the question, what is the deadline for filing taxes for 2022? And so most taxes are due on April 15th each year, but this year, depending on the calendar, it sometimes is slightly different. This year, the filing date is April 18th, 2022. I'm going to take you over to the tax website real quick so you can see where I'm getting this information. If I go to the irs.gov and I click File and I click Individuals, and then it says over here who should file. It says U.S. citizens or permanent residents who work in the U.S. need to file a return if they make over a certain amount per year. Okay. Then if you click here on what's the minimum you need to file a tax return, brings you to this publication and to table 1. So here I am. I'm single, under age 65, and I made $12,550 or less. You do not need to file a return unless any money was withheld from you. And so this table lets you know, what if I'm married? How much do we have to earn in order to file a return, etc. Okay, so this is straight from the IRS website. Also, tax deadline for 2022 is Monday, April 18th this year. There's no extension. It just happens to be on the calendar of the date of this, where this falls on, so that it's on a Monday. Okay, so that's where those 2 pieces of information can come from. Let's go back into our notes. All right, what do our taxes pay for? Highlight with me. Taxes pay for our police, our government, our military, health research, social programs, other programs. And go ahead and type this in for me. Taxes pay for teachers. My salary is paid by the federal government. Taxes are fees that you pay to benefit from government services. So I pay into the taxes, everyone is required to, and I benefit from these government services. The types of taxes we pay property taxes. That's if you own a home. We just did that in last chapter. I pay sales tax when I go to the store on the items that I purchase. I pay income taxes. That's taxes on the money that you earn. And so this is the one we're focusing on for this chapter, the income taxes. Federal taxes collected by the IRS. People don't like to pay taxes, but it is a necessity. In fact, if you do not pay your taxes, the government will garnish your wages. So if you're like, oh, I'm just not going to pay it, well, guess what? They come after your paycheck. Here's the different filing statuses and when you might go through them. So you start out as a single unmarried taxpayer, and this is as of the last day of the year. So what if you get married on December 31st? I actually have a best friend who did. If you get married on the 31st of last year, you get to count yourself as married for the whole year, for the whole taxes. And that's awesome because you get a huge deduction when you get married. Hey, there's one reason to get married, right? Okay, currently you are single. You are an unmarried taxpayer. It's like, why do they have to rub it in, right? You're single, you're single, you're single. It's all over your tax return. Then once you get married, most people do married filing jointly. But there is another thing called married filing separately. This could be if you just recently got married, you both, maybe on December 31st, you earned your income separately for most of the year. And then on that last day you got married, you moved in together the following year. So married filing separately is appropriate for some married couples. You're going to want to read what would be the benefit of one versus the other, or ask a tax account professional. Head of household is if you qualify as the head of household, you're going to want to read or talk to a tax account professional to figure out, should I file for head of household? And then you find your annual tax amount using a tax table. So find your annual tax amount using a tax table or tax schedule. While tax tables are easier, they can also help you master the tax schedule. This is something that if you go to an accountant, they would look up for you. And if you use an automated online system like TurboTax automatically calculates the tax table tax amount for you. But in this lesson, we're going to go practice getting some tax amounts. I'm going to do the first 3 examples with you, and then you're going to do examples 4, 5, and 6 with your table groups, and then check the answers on the key when you're done, okay? So here we go with example 1. I'm going to start with yellow. Will is single, and the IRS tax form and tax income that we're going to be using is a 1040 form and a 51070 taxable income. So we're getting a little tiny snippet of the tax schedule to the right of the tax chart. And so we go find Will's income in between. It says at least, but less than. So see these columns right here? At least this, but less than this. Okay, let's go find Will's. So for example, the first one here says at least 51,000, but less than 51,050. Well, that's not Will. Will made 51,070. So look down until you can see, where does Will fall? 51,070. Do you see it? Okay, good job. I hope you saw it right here. And then you follow the single column down in that row, and we see that Will, as a single taxpayer with his income in between these two amounts, would have to pay $85.08 for his tax amount. Next, Joanna is married filing jointly. I'm going to go green for Joanna. And she's got income of $51,200. So I go find at least $51,200. And then I follow it across to the married filing jointly column. And it shows me here that she's 6,751. That's her tax amount. Rachel is married filing separately. I'm going to use pink. And her income is 51,350. So I go find at least 51,350. And then I follow it across to married filing separately. That's the third column. And we see that her income is 85,083. Tom is head of household. That's going to be the final column. I'm going to use blue. His taxable income is 51,325. So I go find 51,325. It would be in between these two numbers. We follow it all the way to the side to the last head of household column. 7,084 is Tom's income. And then the next page is just answers, but I'm noticing that I have the wrong answer on part A, so I'm going to fix that on your digital doc before you guys open it up. That one should have been the answer we got above. So let me just show you why. Will is single, 51,070. Should have been in the second column, 8508. Sorry about that typo there on that slide. Okay, here we go for example 2. Felix and Alexis are married taxpayers filing a joint return. Their combined taxable income is $210,650. The IRS offers a tax schedule so that you can calculate your tax. Again, if you go to an accountant, they do this for you. If you use a tax table, it does this for you. But let's see how the actual calculation is made. Find the row where 210,650 is read. So look down here. I'm looking here and here, here and here. Okay, here it is. 210,650 would be in this row right here, in between 153,100 and 233,350. It tells me that my tax is this amount plus 28% of the amount over 153,100. So we calculate the percentage part of 29,75250 plus the 28% by multiplying the percent as a decimal times your answer from the last step. So let's go do this work. So we take the 210,650 and we subtract 153,100 210,650 minus 153,100. I'm getting 57,550 of income over the 153,100. So what's my tax amount? It's 29,752 plus 28% of this. So 57550 times 0.28%. That gives me 16,114. And that's the amount over the 29,752 and 50 cents. So I'm now going to add those together to get my actual tax. So plus 29,752.5. My actual tax amount is 45,866 and 50 cents. Okay, so here's the math of how I did that. And then here's the answers here just to confirm what I just got. Okay, the answer for A, the answer for B, the answer for C. And finally, sometimes there's a little worksheet that you use in order to calculate this amount. So we're going to fill in this worksheet with those numbers we just got. So the amount from line 43. So this is the amount of tax we're paying. So 210,650. We're going to put it on this column right here because we are between those two numbers. And then 28%, multiply 28% times that. You can see down here, you'd get 58982. But we just did the calculation on the page before for our tax amount. Do you see how it should have been 45,866? And 50 cents. So if I subtract this guy minus the actual amount that I'm paying, it shows you the difference. Okay, so the number we got from the page before, that calculation goes in the last column. This is 28% of my income, and it tells you multiply A by B, so it tells you the step right there. Okay, so that was examples 1 through 3. Oh, by the way, there's the answer too on the next slide. Can you please try example 4? Ron is single, earning taxable income of 51482. Can you go find it and read down in that column, please, and see if you can get Ron's answer and type it here? That's just reading a tax table, okay? Type it here. There's some directions up there if you want to read it. In example 5, I'm having you do a single person with this income. Remember to look in the single column for that. Then a head of household. Remember to look in the head of household column for that one. Sorry, it would be on this side. Then married filing jointly in the 63 table. Make sure you look, oops, wrong one. Make sure you look in the married filing jointly. And then finally, married filing separately. Way back over to this one because it's in the 57 range. Okay, so try this one and then check your answers at the end. Finally, example 6, using the tax chart, tax schedule to calculate this taxable income for head of household, and then typing in those answers here like we just did on example 3 above. So please try examples 4, 5, and 6 with your table groups and then check your answers on the key, okay? Good job.